I like to think I've been pretty clear-eyed about the impact of this trade war, but I never thought it would be this weird. I don't know what else to call it. Weird. Sure, the trade war is taking its toll on business. We know that. It's just not taking its toll where it was supposed to. I mean, that's why I'm a lot less worried about how the iPhone 11 will sell in China with the new phones dropping today. In fact, I'm actually excited about Apple's prospects in the People's Republic. How's that possible? Because the trade war has produced anomaly after anomaly after anomaly. When the president slapped a 25% tariff on imported steel to protect our companies from Chinese dumping, we were told it would cause prices to skyrocket. After initial faint higher, though, steel prices, they've collapsed. Some grades are appreciably lower than anyone imagined. The reason? Well, a lot of it comes down to the fact that there's still a lot of surfeit of even just American-made steel. Some is because demand's weaker than expected. Either way, the whole point of these tariffs was to prop up steel prices for American companies that deserve it because the Chinese have been crushing us, but it didn't happen. And honestly, the bizarre plummet in steel doesn't even hold a candle to the paradox of Chinese demand. When the trade war got going, we were warned about the possibility of government-backed boycotts of American goods. Instead, we've seen a fairly dramatic increase. Yes, you heard me, an increase in Chinese demand for many American products. Consider the contrarian case of the world's largest consumer packaging goods company. Consider the case of Procter & Gamble. Yesterday, I interviewed Procter's CEO, David Taylor, at CNBC's Delivering Alpha conference, and he talked about the home run his company is hitting in the People's Republic. Let me quote him. Take China. Several years ago, we were minus 5% sales growth. The next year, plus 1. The next year, plus 7. We just closed the year at plus 10, end quote. Holy cow. The secret to Procter's success? They sell the best product at a reasonable price. That's how they're taking share from cheaper Chinese alternatives. Then there's Starbucks. Oh, man, here's a conundrum. They may be an international brand, but the company's still based in Seattle, for heaven's sake. They even had a big breakdown in their Chinese sales not that long ago. But CEO Kevin Johnson recently told me that business has been improving rapidly in China. He intends to keep building new stores to meet demand all over the country. Starbucks has a lot more room to grow in the PRC. The trade war doesn't seem to be hurting them at all. If anything, it's helping them. It's crazy, isn't it? Or how about Yum China, the owner of KFC, Taco Bell, and Pizza Hut in the People's Republic? There have been times when the Chinese did, in fact, have the equivalent of a state-sponsored boycott against KFC. But in the latest quarter, right smack in the middle of the trade tussle, Yum China delivered 4% same-store sales growth. That's fabulous. Okay, the company gave a lukewarm forecast, but they've always been pretty conservative. The fact is, it doesn't get much more American than KFC, does it? Yet this business is growing, not shrinking. General Cho, Colonel Sanders, 2 thumbs up. Finally, there's Estee Lauder. Many hedge funds shorted this stock going into the quarter, betting that their Asian business would be their Achilles heel. Had to be weak, right? Trade war, unrest in Hong Kong. Nope, star of the show. In fact, Asia was indeed Estee Lauder's best region. If you look at how well all of these American brands are doing in China, it's hard to take the doomsayers seriously when they start writing off the iPhone 11 in the PRC before it's come out. The lesson from these other products is that if Apple prices the new phone correctly, and I think they are, the numbers could be much higher than we expect. Chinese like a valuable phone. My conclusion. There might be tremendous antipathy between our respective governments, but that bad feeling certainly doesn't seem to extend to the people. That's right, the people of China seem to like us. And they've actually stepped up their purchases of many American products that were supposed to be wrecked by the trade war. What can I say? Sometimes truth, it's stranger than fiction. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.